In this video, I want to take a look at the Canadian dollar. Symbol is USDCAD, and I did a video on this, which you can see on the YouTube channel. Okay, it's this one here. USD, whoops, that's not what I want. Let me grab a square. It's the USDCAD higher time frame analysis. So watch that video first, and then come back to this video, because I mentioned a couple of things, and I did mention on that video that I would post a video afterwards. I did do a trade on the USDCAD, and I want to walk you through the thinking process and why I put the trade on. Let me first bring up the trade journal so that you can see the trade taking place. And I do post all of my trades on my Twitter feed at Forex Recipes. You can see it on screen now. So there it is there. That's the USDCAD trade. And I waited for this move up into a key resistance level. And then I shorted and set a target as well. The only reason I show you these is to provide you confidence with the knowledge that you're learning. That if you do study the charts and learn price action behavior, then you are able to, with high accuracy, forecast future price movement based on current and historical price behavior. Okay, so let me first jump to a higher time frame, because that's where I start my analysis. Okay, now watch the video, because that talks through what I'm going to go through here in more detail. But essentially, I had noticed that we had come into a very key support level, okay, on the Canadian dollar. And that support level, let me just turn off all these lines, they may be a distraction for you. Here on the left, you can see this is a massive up candle. And you can see that between this wick's high and this wick's low, there's only been one-sided price delivery, okay? The industry terms that as a gap. So I'm going to just put my cursor there. Okay, that brings all the lines back. Let me just highlight this. So there's the gap there, all right? And that gap was open until we got this move down in USDCAD. And that was this week, okay? So if we move the square over, you can see we've now completely come into that gap. You can see prior price action, we did come into it, but these were only wicks, and we do need bodies, candle bodies. Even now, the entire gap isn't closed. We have candle bodies, but there's still an open area here. But essentially, this gap is now mostly filled, and therefore price in this price area is now balanced, okay? And that's why when I saw this, I consider that to be support, because you got to remember, as I've said in other videos, that price is reaching for something. In this case, the USDCAD's come down here, reaching for that level to balance this inefficiency, this entire gap. This entire huge gap is inefficiency, and this move down into this gap is a level of balance for that of inefficiency. Okay, and that's what price was reaching for on the way down. Okay, as I've mentioned in my other videos, you need to kind of understand what is the market reaching for. It's either reaching for a level to rebalance, which in this case was the case for USDCAD, or it's reaching a level to perhaps take out liquidity. For example, these highs up here is liquidity, these highs up here is liquidity, where these highs up here is liquidity, where stops may reside above or below. These lows, there'll be liquidity below that, because stops reside below that. Okay, so that's what liquidity is. So to forecast future price movement, you need to know what is the market reaching for. So once we've come down here, that's where, as mentioned, I identified that as a key level of support. I was expecting, therefore, prices to move higher. And then what I realized was that there was news on the calendar. Okay, that's important. And that was this day here, the green candle. Okay, that was the day, that was yesterday's trading that I traded. Okay, that's the day that that's the what I want to go through in today's trading. Okay. And so my expectation was that the market would reach to some level of liquidity, which is this here. And I considered that to be a good level where the market might be reaching to, and it might still reach to that level because of this inefficiency that currently resides up high. Okay, now I did mention a couple of levels on the way down. I was expecting a move down from where we were before the news release. Okay, and the premise of the trade was really all about the news. Okay, the news was what the market was going to use as a catalyst to inject volatility. Let me drop down to a lower time frame, and I want to show you the thinking. And as I said, you've got to watch that previous video. Okay, so prior to this move up, we're up around here, okay, and I mentioned a couple of levels, so ignore this move up, we'll talk about that in a minute, but we were up here somewhere when I said we're going to get a news release, and we had these highs intact, right? At that point in time, we had this, what was liquidity, and the market was going down, okay? Now, I was expecting the market to get down to this inefficiency, okay, but it didn't get down that far, and that is because there was a level above that I also mentioned in my video saying that was quite an important level, and that was on the daily chart, and it's marked here, here now, and that's exactly where we came into. So if you watch that previous video, you'll notice that that level was the down candle on the daily charts, and I will just get rid of these lines so that it's not too much on the charts here. And so this was the day, right? It was yesterday that we're talking about, and this move hadn't occurred at the time that I was creating the video yesterday. And I had mentioned that this level here was important, and you can see that's exactly where we've tapped down into. Okay, I was expecting to move a bit lower, but I did mention that this may be a key level, and it was a key level, and that's exactly where we've tapped down into, and then we've gone up. Okay, now I want you to notice a couple of things, because I'm going to show you why I shorted this at the level that I did as per my trade journal here. I went short from this level here, as you can see, okay? And I'm going to talk about that now, right? So number one, I want you to notice this here, okay? Notice that is an area where we don't have any body candles, okay? And even now we don't have any body candles. So even prior to this move up yesterday, that area was an area that I was looking at for a potential high on any pump up. And so we still may even get it back up there because we still don't have body closures inside of that range. When you only have wicks inside of that range, as we can see, like here, this is what we saw because this was not there when I made the previous video. When you only have these wicks, then expect that to be a level where the market might be reaching for, okay? And we still don't have body closures there, so the market could still be reaching for that level sometime in the future. So that's a key level, okay? And that was the yellow shaded area on my chart, okay? If we go back to the that area there is that, okay, we can see that is where resistance was found on this huge pump up, and that's where I started to short. You can see my short entries there. But I'm going to show you what I saw. What's this entry? There's actually a model here that you can use to forecast future price movement, as I did to the downside. I'm going to show you what that actually looks like so that you can study that chart and try to use that as a model for future price action forecasting, okay? Now, you've got to have all the things I'm mentioning in place. You've got to have narrative. That's important, right? When I speak about this model, on my entry to go short, it's not a model that you can use just on its own. You've got to have narrative. You've got to understand what's the market reaching for, okay? Why was this a support level? Why was I looking for higher prices? And I did mention that on news days, you can get these spikes down as well. So it wasn't always going to be a guarantee that we were going to go up exactly from here, but that was my bias for that particular day. And you've got to understand that. Why was that support? As I said, because that is at the low end of this gap. You've got to then understand what's the market reaching for, okay? I felt the market was reaching for a level higher, okay, as explained in my previous video. You got to go and look at that, right? I was expecting the market to come up into this area, okay, and we still might, who knows? That's still a level that is a point of interest, especially when we have these highs up here all close together. That is relative equal highs, okay? Now, even though I was expecting the market to go there, it didn't. It came into this point of interest, okay, which was important, and that's what I had identified, and that's when I took my short, okay, even though I did not recognize that yesterday in my video when I analyzed this market, but I certainly looked at that as the market was going up and I started to see weakness, okay? I'm going to show you one more thing. So remember, you've got to have a bias, okay? And, you know, when you're going to look at these models that I'm going to teach you now, this particular one, you need to know, as I said, you've got to have a bias. What's the market reaching for? Why is it going to go in the direction that we are forecasting? Let me drop down to a 15-minute chart. And there's another thing that I want to show you that I do. And this will only be something that you will be able to do as you start studying the charts and identifying these key areas, okay? You won't be able to do this without experience, okay? And what I do here, this is Monday, start of the week. Now, if you understand the markets will take traders in the opposite direction. There will be some level of manipulation, and it's typically at the start of the week. And that manipulation is to trap traders in the opposite direction before going in the real direction of the move. And that's something that you really need to understand high time frame direction of bias to understand what and where is that manipulation. If I'm looking at the daily charts and I have a prognosis that we have hit a key support level, like I said, at the low end of this gap, okay, then my prognosis is that we're going higher. I may not know exactly where, but my prognosis is that we're going higher, okay? And so if on the start of the week, I see this kind of movement, let me drop down to a lower time frame, where the market's taking traders down and at the same time stopping out, you know, taking liquidity below, then I know that this move down is really a fake move. It's the manipulation at the start of the week because my directional bias is already to the long side based on a high time frame, okay? So what I will do is I'll use that to kind of work out where can my potential targets be if I do find an entry to go long. Now, if I show you this chart, you'll see I've got a line here, and that was a forecast of the exact high. That line is 1.36748. We can calibrate that to 1.3680, okay? So, sorry, 1.36750. Okay, because that line there, the calculation, I'm going to show you how we got that, 1.36748. I'm going to calibrate that to 1.36750. So I'm going to take that 1.36748, I'm going to draw a line, and I'm going to calibrate, I'm going to make this line 1.36750, right? We round it up to the nearest institutional price point, and look at where that line comes in at, okay? Almost to the pip. The high on that bar is 1.36754, right? So 4 pips away from the high, okay? Now what we do is we take this manipulation swing on Monday and we project it up, okay, and that is a projection of 2 standard deviations. And what we do with that, we use that to kind of find, do we have any other areas on a high time frame that may align with that level for that to be a potential high, okay? And we do. We have this yellow shaded area, and that is let me just take away all these lines. There's too many, chat will be too busy otherwise. That is this area here that I pointed out where we have all these wicks, okay, and that is going to act as a level of resistance. So when you have that kind of a confluence, where you have a mathematical calculation coming to an area at a similar price point, and you have a high time frame level that may act as resistance, then that's how you use those numbers, you kind of need to have a few things in place, right? Number one, high time frame directional bias was to the upside, okay? Therefore, manipulation, when we use that to calculate a mathematical target, it needs to be a forecast to the high end. That forecast came in at this level, right? This line here, okay? And then we look at that and we say, okay, what else do we have up around that level? We had this, which was a high time frame level of potential resistance. And that's where I'm looking to see, I'm not shorting exactly when I get there. I'm looking to see, do I see any of my short setups at that price point? Okay, and I did see a short setup at that price point. I'm going to go through that now. I trade on a shorter time frame, okay, 5 minute, 3 minute, 1 minute, okay, and I'm going to teach you this model. So let me make this chart bigger. Now, what I'd like to see is, I want to see, so here is the swing low. Okay, this is a swing because you've got a point here that's low, and on either side of that low point, you've got higher lows. Okay, after that swing, you get that move up into that key resistance level that we've marked on our charts, right? These are predetermined levels, okay, that we already have marked on our charts. I'll take away this, this red line is that calculated mathematical target that's in alignment with this yellow section, okay, which is that level of resistance on the daily time frame. I'm looking to see how does price react once we get there, okay, and I want to see a break in market structure, which we get on this move down. This is the low, this is the swing low that created that high point. Once we get a move back below this level, that's a break in market structure. I want to see that move down with strong price displacement. And what I like to see is a gap inside of that leg that took out this swing low. We can see there's a gap there. You've got to understand what these gaps are. These are one-sided price delivery, okay? You can see price has only been delivered to the downside in both these candles. And as doing so, it's left this gap. We've got a wick on either side. On the left, on this low, there's a wick. On this high, there's a wick. And in between there is one-sided price delivery. So that there is a gap, okay? I'm going to put a square inside of that so you can see it clearly. That there is the gap, right? In that section, there's only downside price delivery. And what I want to see is I want to see price come back into that gap. That's what I want to see, okay? And then I want to see that that gap is holding, and we can see that in the next bar. Once we get through that gap, we start to come down, okay? That's where I will take the short entry, right? That's where we can forecast future price movement to the downside based on everything that we've spoken about, not just this particular entry model. This is an entry model, but you've got to have the narrative behind you, right? We had support on the bottom of the daily chart, okay? We had a reason to be going up, okay, and we had volatility injection by way of the news. We saw this pump up, okay, and at the start of the week, we had the initial manipulation on Monday that I've shown you. All of those things put together is what makes this work. This will not work on its own, okay, so you need to know where's the market going, where's it been, what's it reaching for, where's support, where's resistance, okay. Now, where's target? That's an important part. I took this trade off around this level here, and why did I take it off at that level? Again, you can go back and look at, when you started this chart, have a look at the Twitter post that I put up where you can see where my entry is. You can see that entry is inside of that gap, okay, where my exit is, and I'll talk about that now, why I entered. You already know that from this video. So let me talk about the exit, and then you can go back and you can study this, okay, on your own charts with these numbers and everything I've mentioned in this video to be a great lesson for you, okay. So targets, how did I set the target? Well, I went back to the daily chart and I looked at this gap, okay, where are we? Let me find our current price point, okay. This gap has a midpoint, okay, and that's what I had calculated, right? So that gap has a midpoint, and this dotted line, which you can see here on my Twitter feed, there's that dotted line, okay? That is where I took the exit, right? So we've gone down and up, and as we're coming down, I know with experience that we need to come and kind of rebalance this movement. Essentially what my experience tells me is that the midpoint of this gap that we have, and I want to make sure you understand what gap I'm talking about, okay? It's between that massive large candle. There's this wick and this wick. We've only had by price delivery. That is what is known as a gap. So I've taken that gap and I've measured what's the midpoint, okay? And that is the midpoint, and that's where my target was. So when we went back up and I shorted, I'm expecting a move back to that midpoint of that gap, and that was where I have taken my exits, and you can see that dotted line here, okay? So your job now is to go back and study the chart. I've given you everything that I have used to enter and exit this trade. I've given you the narrative, the direction of bias at that point in time, the levels that I was thinking will hold in terms of price, where I think price was going to reach to, and what was my entry technique to enter into that position, which is documented here on my Twitter feed. Give this a thumbs up on the Twitter if you think that this was useful, right? That this model you now understand. So I know that you have an understanding of that model. If you like this video, give this video a thumbs up so I know that this video is helpful, so I can produce more videos like this that will help you understand how I am using price action behavior to forecast future price action based on current and historical price action behavior, okay? So everything I've used to enter and exit that trade has been discussed in this video. Make sure you watch the initial video as well, okay, that I mentioned, because that has a bit of information on the narrative of what I was looking for prior to the news. Now, I will say that trading news days is risky. You need to be an expert, right? You need to be an expert and know everything that I've mentioned here. You need to be confident that you know where price is going to hold, where price might go, where's your risk, where's your potential targets, what your understanding is of where price is reaching for, to know where are those high points. And most importantly, you need to know what's your setup. What are you looking for to take the entry long or short? Okay. Remember, this channel is all about understanding and learning price action behavior. That's what I'm teaching here. And I've taught you some very valuable lessons in this USD CAD trade that I did yesterday. Go back and rewatch this video, study the charts on your own computer, look at the entry exits that I've documented here on Twitter. Okay. And if you have questions, put those questions in the video or on the Twitter feed, and I will do my best to respond, because I want to make sure you understand what I'm teaching in this specific video, particularly about having narrative. That's very important. Once you have narrative and you know where price will hold, where you think price is reaching for, then you don't simply enter just because price reached to that level. Okay. I did not enter, if I go back to 50-minute chart, I did not enter just because I got to my point of interest. Okay. I waited to see if I was going to get my setup. Okay. That's important. You need to know what you are looking for to enter. And so I knew exactly what I was looking for to enter, and then I action based on my own risk tolerance level and my own experience and understanding of price action behavior, right? That's why I have the confidence to trade the lot sizes that I trade. Okay, these are not small lot sizes, but look at my record. Okay, why do I have the confidence in being able to put that size on? Well, just have a look at my record on Twitter, have a look at my record on YouTube. I journal all my positions, and it's because of my understanding of price action behavior. Okay, don't use any indicators, don't use anything except price action behavior. That's what this channel is all about. I want to teach you how to recognize and learn price action behavior, okay, and how to use that to forecast future price action behavior based on current and historical price action, okay? So I hope this video has been useful. I will now talk with you in a future video. Put your questions in the comment section of the YouTube video or on Twitter, and I will be happy to respond as soon as I can, okay?